All right. Good morning. Thank you for joining us today to share an overview of the up and coming Payday Super legislation changes. My name is Fleur. I'm one of the relationship managers for smartMonday, and I'm joined by Janine Robinson, our future group education manager. Hi, Janine. To start, we'd like to acknowledge the traditional custodians of country throughout Australia and recognise the continuing connection to lands, water and communities, and I pay respects to Aboriginal Torres Strait Islander cultures and to elders past and present. So, disclaimer today, a quick note that everything we're talking about is general in nature, should not be considered personal advice to yourself or your organisation. Your questions are welcome, and we're going to do our best to answer them. However, this content relates to both super and payroll. So please remember that we may not be the best source of specific information about your processes and your systems that you're using within payroll. And like I said, we're going to do our best to support you and answer queries. So please feel free to add them to the Q&A, but we are going to answer those at the end and we'll come back to them once we finish today's presentation. So I'm going to start with what Payday Super actually is and why it's being introduced. The legislation was finalised early this month, November, and it confirms that from 1 July 2026, employers must pay super at the same time as paying salaries. Until now, super has only had to be paid quarterly. That may not be how you're paying it, but that is the rule. Why the shift? The goal is to cut back the risk of unpaid or underpaid super. And the most recent data shows that in 2021-2022 financial year, around 2.8 million Australians missed out on 5.1 billion in super that they were legally entitled to. And that shortfall compounds over a lifetime and drags retirement balances down. Payday Super is meant to reduce that gap. It should also make it easier for individuals and the ATO to spot missed contributions early rather than months and sometimes years after the fact. The change will have real consequences for employers like you and super funds. It tightens cash flow cycles, increases operational demand, and raises the bar for accuracy and compliance. We are in the preparation phase now with about 7 months to get systems ready. Employers, super funds and the ATO all have work to do. So this shift affects hundreds of organisations across the superannuation sector and hundreds of thousands of employers. This is the moment to review your processes and your systems. The superannuation system currently processes around 2 million transactions a year. So after Payday Super legislation comes in, that could reach roughly 500 million. So for funds like ours, that means we're gearing up for higher volumes of smaller transactions and tightening how we handle errors and returned payments. The legislation cuts the allocation or return deadline from 20 business days to only 3. So the margin for delay is gone effectively. For employers, the immediate focus should be payroll systems and workflow. If you aren't ready to run Payday Super from 1 July next year, you face the risk of penalties. A new 7-day business, a new 7 business day, I always get that back to front, excuse me. A new 7 business day due date will apply for contributions to reach an employee's super fund. The clock starts the moment the salary or wages are paid, and that window is meant for clearing times across different payment systems and clearing houses. If a contribution isn't received within 7 business days of Payday, the employer is liable for super guarantee charges and penalty fees accrue from day one. This is a substantial operational change. The earlier you start pressure testing your systems, the fewer surprises you'll face. I also want to reassure you that smartMonday already has a program of work underway to prepare for Payday Super. The scale of this change is large, so our focus has been on operational readiness. We've begun to look at system capacity to ensure that we can manage more frequent and significant higher transaction volumes. Our administrator is confident, but more testing will take place over the coming months. We're also taking a look through exception handling and rejection workflows. Most transactions do flow straight through the system without friction, especially when the employee's details have not changed. But data accuracy is critical, and this is where issues tend to surface. Small errors can create real problems. A single digit wrong in a tax file number, a name change reported to the employer but not the super fund, or the other way around. Simple spelling mistakes. These everyday scenarios will present challenges under Payday Super as the margin for allocation is much shorter. We're investing in automation and system improvements to minimise manual intervention. But the reality is that any manual requirements to look at mismatches won't be sustainable to ensure everything that needs to be returned reaches employers in such a short time frame. This is a shared responsibility. Both us as the fund and employers need to tighten data accuracy to avoid delays. Clean data up front will help to avoid bottlenecks as volumes rise. We have training planned for both our teams working on the systems and our contact centre staff to ensure that they can support employers and members confidently. I'd like to confirm that we're working on technology and systems in line with this legislation, and a dedicated working group involving our administrator, risk teams, and technology specialists is in place to coordinate delivery, track readiness, and escalate any issues. Of course, we're going to be providing ongoing updates to you as employers so you can prepare your own payroll and process changes. Janine's going to talk through some considerations, so I'm going to hand over to you, Janine.
Thank you, Fleur. Okay, so there is really a lot to think about. So in line with all the changes that Fleur has outlined, it's really just important to note that action is required. So let's have a look at some of the considerations, the questions to ask. And I just want to start with your payroll systems and cash flows. So are your payroll software and internal processes able to manage the increased volume of payments? Fleur mentioned that we're looking at that going up to 200 million a year. So that, it's a lot. What will the impact of the cash flow paying SG more regularly be in your business? Do you need to consider a change to your pay cycle? The latest data that I've seen shows 2% of employers pay super weekly, but nearly half of all employers pay salary and wages weekly. So that gap really does suggest there's many organisations out there that need to consider and perhaps reassess their current approach and process. Now, onboarding is another area that we need to look at. Onboarding processes, managing employees' super fund information is going to be more critical for organisations to manage onboarding systems in line with payroll cycles. And this does include factoring in stapling legislations for those times when a new employee does not provide their super fund information. Now, the Payday Super legislation does include a 2-week grace period for new employees, but there is still some urgency there that's coming soon that we haven't had in the past, I think, to ensure you do get that employee superannuation information in a really timely manner. Now, Payday Super also means that if an existing employee makes a change to their super fund information, and Fleur mentioned some examples a moment ago, you need to ensure that your systems internally flow through to payroll without delay. Your employee information systems, your onboarding processes, all of that data flow probably just is something to take a look at sooner rather than later. So with payroll and onboarding in mind, what are some of the risks that you need to think about? So your systems, returned payments, managing all that information. There's likely also going to be an impact on reconciliation activities, and that could impact staffing level requirements due to that higher volume of super payments. It's also worth understanding that there's penalties associated with Payday Super. So let's take a look at those next. Okay, so superannuation guarantee charges are being updated for Payday Super. The goal is to ensure workers aren't worse off if super is paid late. Also to encourage employers to disclose and fix issues quickly. And the consequences for repeated non-compliance have been increased. So if you are in a position where you do incur charges, the charges do start with the shortfall in super payments and the associated earnings. And then on top of that, there's an administrative fee of up to 60% of the shortfall and the earnings that employers will incur. Then there's a second phase. If after SGC is assessed by the ATO, the payments have not been corrected, then additional charges do apply for employers from the ATO. Now, I do think it is worth noting that the ATO has stated they want to work collaboratively. They do want to get it right. So if you are in that situation, communicating with the ATO will help. Making voluntary disclosures of errors can help reduce charges, and the ATO does retain discretion under the legislation to reduce fees that might be applied. Okay, another thing that is impacted by Payday Super is the maximum super contributions base. So under the current rules, the government sets a quarterly cap on the amount of an employee's income, which their employer must make superannuation guarantee contributions on. This is changing, and it's moving from a quarterly cap up to an annual cap. So the MSCB for our current financial year is $62,500 per quarter. This means earnings above the MSCB don't attract super payment obligations under the superannuation guarantee rules. But Payday Super has shifted this from a quarterly to an annual cap, and it's our understanding that this means employers must pay super at the SG rate of 12% until the annual cap is reached. So what does this mean in practice? Well, higher income employees may receive their full annual entitlement sooner. And then no more super payments are required by law from their employer after they reach the cap. So this is another thing to review in your payroll systems. Those higher income employee SG obligations will need a review where there was a quarterly cap and that was locked in to the systems that you have. You might need to remove that. You'll need to ensure that payroll systems can track a year-to-date earning against the MSCB, I should say, per employee. Now, the MSCB is the legislated amount of super for higher income earners, but your arrangements with your employees could vary. If you're making contributions for these employees that exceed the MSCB and also the concessional cap, your employees may need to manage that tax implication with the ATO, with their accountant, about their excess contributions. Now, the draft legislation also introduces a formula to calculate this, and you can see that on your screen. The example shown is for the current financial year. So we're not aware of any proposed changes to the SG rate or the concessional contributions cap at the moment, but if they were to change, then this will impact the MSCB into the future as well. Okay, So we know we have lots of different types of employers at Smart Monday, and for small businesses, I think it's worth noting that the impact can be more pronounced. If you're using the small business super clearinghouse, you'll need to move to another solution before 1 July. As we mentioned earlier, payroll considerations, cycles, cash flow implications. If you do change your payroll cycle to accommodate Payday Super, you need to think about the communication with your employees so they understand what is changing and why. And I think there is real work ahead. So all businesses need to be prepared and really assess their readiness for Payday Super, but smaller employers might have some additional complexity in managing this with the closing of the small business clearinghouse, their cash flow and staffing levels to meet the increased volume of transactions and new legislation. So it really is worth looking at all of this now. The changes do need to be made ahead of 1 July, as you saw earlier on that timeline, but there really is no penalty for starting early. You can make the changes now, get ahead and start testing for any of those problems that might arise. So Flo did say earlier, we really want to support you through this. We will continue to provide employee and member communications, but there are other sources of information as well, and some of those you can see on the screen. So if you do need help, I probably would suggest talking to your accountant or your software solution. It's probably a really good place to start in terms of your processes and systems. So we really would love everyone to know exactly what they need to do next. So I'm going to pass back to Fleur. We've got a bit of an action list so you can make sure it's really clear on your to-do list. Thank you.
Thanks, Janine. Action points. So this is a quick summary of the items that we've touched on today. We recommend you put this on your list. You don't leave it as the risk for those changes that we've talked about and getting it wrong could impact you. Assess your payroll systems and cycles and make required changes. Be prepared for 1 July 2026. We're almost at Christmas 2025, so time does sneak up on us. Ensure payroll staff are receiving training on the changes. Review your onboarding procedures, beg your pardon, for new staff. And if you are using the Small Business Super Clearinghouse through the ATO, that is going to close, so you need to consider another solution. Now, that is the end of our presentation. I'm just going to check the Q&A, and I'm also going to pop into the Q&A for anyone the links that were on the previous slide. This is the Australian Taxation Office, information about Payday Super, the Department of Treasury information, and ASFA, which is our superannuation a fund authority who we all report to, so that you've got access to that. Today is recorded, so if you want to download and keep an eye on those bullet points and of course what we've discussed today, of course you're welcome to receive the recording. We don't have any Q&A at the moment. I'm going to give it another minute so that if you have any questions, you are more than welcome to pop them in. Otherwise, you can reach out to Smart Monday, your relationship manager, or our contact centre.
Okay, thank you so much, everyone. We really appreciate your time. Hope there's been some information and you've got some action points. We will stay here for just another moment in case anyone does pop into the Q&A, but thank you again.